course you can. All you need is a bank floor plan, your wife, and a perfect day to rob a bank.
Of course not, but if you still want to buy a house without any cash, you don't have to win a lottery or looting a bank. Wondering how? Let us share our experience.
Soon after the first year, we realized that we need to get out of this renting and stop wasting money. So, like every other person, we went to our bank and see what different options of mortgage we can get.
Since it was only been 1 year for us to working and our credit score wasn't that good enough, bank obviously declined our mortgage, and that actually left us heartbroken.
But we didn't lose our hope there. With a referral of our friend, we actually talked to one of the independent mortgage agent, and after listening to all our financial details, he said, yes, why not? You can get a mortgage. He specifically said, anyone can get a mortgage. We were so happy. There, he explained us everything. What documents needed, what is the eligibility requirement, what is the rate we're gonna get. So we're gonna share every detail with you guys today.
But you guys have to stay with us till the end, because that's the climax part when you get to know what we actually did. You guys probably already know in Canada, the current maximum finance available is 95% of your purchase price plus the extra 5% that you have to arrange yourself plus the closing cost. However, it's very much possible to get 100% of the financings done provided you know the rules and criteria. So if you're like us who don't have enough money but still want to buy a house, you can apply for no flex mortgage. Well, some people call it no down payment mortgage as well, but for the sake of this video and for the standard of industry, we call it no flex mortgage throughout this video.
So under this program, a lender will be ready to give you a mortgage even if you don't have money for the down payment. So in other words, a lender will allow you to borrow your down payment, which not a lot of lenders let you do that. This will be very useful for the people who want to buy a house but they don't have money for the down payment.
Now let's talk about the different sources from where you can actually borrow this money from. First, you may apply for a line of credit from your bank. Your bank can give you from 5,000 to 50,000 based upon your credit score and financial requirement. For the second option, you can apply for a personal loan from your bank where you can get up to 50,000, but keep in mind the requirement for the personal loan as well as the line of credit is completely different. For that, you may need to talk to your bank. Third option, probably the worst choice, you can even use your credit card based upon your credit limit, but you will be paying way higher interest, up to 19.99%. So that option was no for us. The fourth option, the safest option, is to have a gift of money from your immediate family member. That could be your brother, sister, parents, or the grandparents. Now both the party required to sign a document saying, I'm receiving a gift and I'm sending a gift. This guarantee that no repay of money is required. We need sleep.
I know.
4 hours. So guys, if you are wondering the purpose of this video, a long story short, our friend has started looking into a house who is new to Canada, approximately 1 year old, and he's having a hard time getting a mortgage. We had a discussion with him and we started sharing our story, what we did, and that took us back to my notes, what we actually started doing, how we started looking into a mortgage. So we are like, how about helping 100 of our friends who are sitting on that side of the camera? Maybe we could be able to help some of you.
Well, you can get this type of mortgage mostly from the B lenders. When I say B lenders, they can be non-banks or private lenders. Most of the A lenders or the banks probably won't give you the same option. To know more about the different type of lenders and what are the different choices that you can make, don't forget to watch our next video.
Now for sure, we all worried about interest rate that we will be paying them. Well, in our experience, the private lender usually charge 1% higher, or it could be more depending upon the credit score and the financial requirement.
That's another very good question. Most of the B lenders can actually charge you 1% in terms of the processing fees. I know that sucks, but you can get it lower down using your negotiation skills. How we can negotiate with the lender? That's a topic for another video.
Okay, we'll be honest with you here. Getting no down payment mortgage is not easy, but there are certain factors that could help you to improve the chance of getting approval. Factor number one, the credit score. Yada yada yada. All big lenders want you to have an excellent credit score, but if you don't have one because of any XYZ reason, just make sure you haven't missed a payment in at least last 1 year. Yes, lender look into what you do for your livelihood to make sure they are secure enough before giving you money. They basically look into 3 things for the employment. With income, they just want to get to know how much you are making versus how much you want to borrow. And with stability, they actually meant to know how long you have been working for and what kind of job you're doing. Either it's a full-time or a contract. Contract could be little tricky. And with the loss of income, touch wood, hopefully it won't happen to any one of us, but all they want to know is whether you will be able to make a payment even with a drop of income. So make sure you satisfy your lender with all these 3 things while providing employment information.
Most of the eligibility requirements are almost same as a regular mortgage. This program is eligible for first-time home buyers. So when I say first-time home buyers, that means that is your first home that is gonna be an owner-occupied. That means it is not for the rental property. In terms of other requirement, you need to have a minimum credit score of 680. But again, it depends upon the lenders. Some can easily get you a mortgage even with the lower score. For the other requirements, the house can be a new construction home with the builder warranty, or it can be a resale home. So other financial requirements are more or less same as well. So they will expect your TDS or GDS between 39% to 44%. So should we start with the pros?
Always with the pros.
Okay, so the first thing is no more wasting money on renting. We are against renting. So finally, by buying a house using this option, you can start paying your own mortgage versus somebody else's. And on top of that, you can start building your credit history and equity.
So with this option, you can start living in your house right away, which is advantage number 2, versus renting, where you will be paying rent and waiting a year or 2 before getting approval from your bank or any other A lender.
Next advantage, if you manage to borrow 20% of down payment, you don't have to buy CHMC insurance, which can actually cost you a lot in addition to the house price.
In today's market, where the rates are extremely low comparison to last 20 years, so paying your B lender 1% higher may still be worth more versus in the future when the rates may go crazily high. And that's the advantage number 4.
So now let's talk about all the disadvantages of getting into this plan. The first one, which is the obvious one, is now you are under more debt in addition to your mortgage payments. So say you are paying $2,000 as your monthly mortgage. So now on top of that, you have to pay your monthly payment for line of credit or your personal loan, or to the worst, your credit card payments.
The second con is related to your income versus debt. Now I'm being devil's advocate, but do you have enough stable income to support this huge amount of debt? What if you don't have a job? Or what if there is a medical emergency and you can't work? So you never ever want to be in a situation where you have lot of debt but no money to pay.
So the third con is borrowing money from the bank in terms of line of credit or credit cards or personal loans comes with a high interest rate. That means you are paying bank a lot of interest as compared to regular mortgage options.
The last con that matter to us a lot in our time, what if you actually borrow money from your family member or from your friends and you are not able to pay them on time? This could happen because you are already paying your monthly mortgage, your CHMC, and on top your no down payment mortgage. You definitely don't want to risk your personal relations for that.
No.
Why no?
I wouldn't take that risk, right? It's too risky. You have to make sure that your income is strong enough, stable enough to pay all the debts. And you know what? It is a lot of headache. It's a lot of stress on your mind. I would rather wait a year or two and take a traditional mortgage and buy my home rather going to this option. Okay, and why you will go for that?
I'm ready to take a risk because I know with my income I will be able to pay the debt on time. And in this market, when the rates are really low, even I'm paying higher rate to my lender, I'm still better off than paying higher rate to a lender down the line. And third most important point, what if I actually wait 2 more years to get approval from lender A in this house market, which by the way is already touching sky, is out of my reach and I won't be able to afford it.
Okay, that's fine, but I will go for no.
And I'll go for yes. What are you guys going for?
Ultimately, is your decision whether you want to buy a house or you want to wait to get a proper approval. Let us know in the comments below what you guys think about it. What is your opinion in terms of getting no down payment mortgage?
Don't forget, your one input may help other to take a right decision.
We'll see you in our next video, next awesome video. Tab tak ke liye, take care and
Watch our previous video too, renting versus buy. We did a good job there, right? This require both the potty